Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Apple report for Wednesday, April 3rd, 2024. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already. Subscribe to the Wicked Stocks YouTube channel. Share the content, if you would, with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. Let's take a look at the charts. I'm going to start with this chart. We slipped into the 1% zone. I could draw a horizontal line that is parallel with the black and red lines of 167.19, but a green one just above 167.19. That would be 1% above that area, and we did slip into that area on Tuesday. So this is the buy zone. 167.19 is the exact level, though. It can absorb selling, as I've been saying, not only for the week, but also through April and into the third quarter. From here, we actually may put out an annual low here. From here, we can round back up into the low 200s channel resistance over the next 3 to 5 months or so. That's kind of a guess. On the way up, we do have a descending channel top on the weekly chart at 183.40 and dropping. And it is, I think, considered, I would call this a realistic 1 to 2 month objective. And in fact, on the daily chart, we can jump to the daily chart right now. That same formation is at 183.09 on the daily chart. And you can see how we've slipped into this zone, or we're very close to 167.19. So on the way up, I don't know if we'll see this today. We have nothing but minor points that are scattered about. None of them have real pivot point qualities. All of them are very tradable. They all represent something. But in terms of the level to sell aggressively for the day and possibly through the rest of the week, that would be 172.62. Now, yesterday's volatility doesn't suggest that we would see that today, but if so, it is a very sellable level. And you may have already been bottom picking this market as we push into the 1% zone above 167.19. You would just basically add roughly 1.67 to 167.19. And, that would give you, what would that give you? That would give you 168 something, 85, 86, something like that. So I'll let you do that math. I don't really like to put the green lines up in the early buying or the early selling. But it is, a valid approach. And so we have slipped into the 1% zone of long-term support. And from here, we can rally up to 172.62 over the next few days and 178.53 over the next few weeks. That 178.53 horizontal channel top, a new one formed in part by yesterday's low, is moving across the chart, but the 183.909 is dropping, and they all converge. I think it's about the third week of April. And so 2 to 3 weeks from now, that is perfect for pushing into this zone of resistance. Significant it is, 178.53 to 183.09, able to contain buying through May. We could fall away from here. We could continue to fill this area in for the next month or two. And once again, if we were to close above 183.09, especially as it converges with this channel top, if we were to close above that area in a few weeks, that would be an indication, I think, of a good low, not only into the third quarter, but possibly the rest of the year, as we could continue onward and upward within several months into the low 200s before we find trouble sustaining bullish momentum on a longer term basis. So that is kind of the big picture. I'm trying to look for, here's a chart as representative of what if we close today below 167.19. We could fall into the lower 160s by the end of the week, this former channel top. This is a significant zone of support. But you really have to weigh it with what if we close below 167.19? Do I have them both in the same chart anywhere? Yes, I do, right here. So you can see, here's the scenario I think that could play out. If we close below 167.919 by the 1% margin of 165.52 or lower, yes, within a matter of several days, we wind up falling into this 161.88 to 163.29 region. This is a solid 3 to 5 day swing trade, 1 to 2 week swing trade. We could bottom out here for a week or two, rally back up to 167.19, and then we've got a battle between these two areas. I do think that the battle would be won, if you will, by 167.19. In other words, if we were to close below 167.19 by the 1% margin, yes, we have hesitation on the way down in this 161.88 to 163.29 region, but as the months play out, as the next 3 to 5 months play out, we continue south to 136.59. So at 167.19, you can bottom pick that. If you're an options trader, for instance, you could consider reaching for 178, 180 strike, out of the money calls that don't expire. I would go a couple of months out on that expiration. I don't think that's more than a 1 month play to the upside, but you just don't want to see your out of the money call deteriorate to nothing as you approach your objective. You could, as you're also, testing 167.11, you could consider reaching for 200 strike out of the money calls that don't expire for at least 6 months. I would go a year out on that expiration. Inversely, if we close below 167.19 by a 1% margin on Friday, in other words, if we close Friday at or below 165.52, then I would liquidate any long any calls that you may have purchased, and in turn reach for perhaps 137 or 138, 140 strike out of the money puts that don't expire. I would go a year out on this. I see that as a 3 to 5 month play, and I would go a full year out on that expiration. Is there anything else that needs to be expressed for the day itself? Not really. There are these minor points. We've tested long-term support. I don't want to encourage really any selling until we get to 172.62, and that could happen over the next few days. This is a 3 to 5 day swing trade as well. We could fall back from here, back to 167.19, but if we close above 172.62, this formation over the next few days, we've got a good April low. Over the following 1 to 2 weeks, we push into the narrowing zone of meaningful resistance between 178.53 and 183.09. I think that pretty much wraps it up. Please click like, share, subscribe. Check out wickedstocks.com. We offer a 5-day free trial on everything we do. I'm going to be back tomorrow for Thursday's Apple Report. You have a great day.